Hey traders, happy Wednesday. This is the Chan Man, and welcome to a midweek update. It's been a crazy week, guys. We got OPEX, we got some earnings. It is definitely a jam-packed week, and hopefully we are navigating well for the first half. In this video, guys, as always, I want to break down my charts, my roadmap, and what I think are the most important things that we should be focused on this week. So let's waste no time, guys. I appreciate y'all, and let's get to work. So we are dealing with October 17th to the 21st for this entire week. And really, guys, just to kind of recap here and, continue to build upon it, we're getting into the big boys of earnings, what I like to call the start of earnings. We got through some banks beginning of the week. We had Bank of America and we got through Goldman Sachs. So beginning of the week, guys, we were going a little bit higher. Banks weren't, imploding us. And now we want to kind of hear from technology, where we got to hear, guys, from Netflix yesterday, which we're going to take a quick look at. But man, oh man, did they have a stellar move. Pretty good earnings. But more importantly, guys, we don't need to necessarily break down their earnings, in crazy detail. But I do want to note, and again, we'll take a look at Netflix, but this earnings season, we want to focus on the relationship that I always like to focus on. Do they reward good earnings? Do they reward bad earnings, or do they sell off good earnings? And of course, do they kill bad earnings, right? That's always a relationship, guys, with the most important being, if a company has great earnings, do they actually go higher? If they do, tells us a little bit, at least for day to day, how the market might react to other good earnings and how that might, again, translate to the market. However, guys, if we start to see good earnings get sold off, that could be a warning sign that big money just wants to sell, right? It's never straightforward. We have a lot of companies we need to hear from. There can always be one blip from one company that changes it all. But hey, week by week, day by day. So again, as we heard from Netflix yesterday, they had a great report. Market obviously having a red day here with Netflix still up 12%. So again, just because one goes up doesn't mean the market can't go down. Just a relationship we want to continue to note. So tonight, guys, right, just to move forward here, we're getting towards the end of this week and a lot more next week. But on Wednesday, so tomorrow, or tonight rather, excuse me, we have Tesla. Definitely the biggest one of the week by far. It's a big company, big stock, big weighting, now in the S&P. Going to be interesting, team. We'll take a look at it here in a minute, but I don't really have too many thoughts. I have no, guesses, no opinions. I don't own or work for the company, so I have no clue what they will say. But I do know that it could stir up the market. So we'll talk about where we could go. Another one here, guys, and we'll see just how big of an impact this might have. LRCX, Lam Research. They're a pretty big company in the semiconductor space. So again, names like NVIDIA, AMD, definitely could have an impact based on what LRCX has to say. So just keep an eye on that one, team. And then Thursday, we have Snapchat after hours. This is one, guys, that, they're not a huge company themselves or a super, super important stock, but they do give us a good insight into social media, advertising. We've seen a lot of crazy, reactions from Snapchat earnings on names like Google, Facebook, Meta, things like that in the ad space. So that's pretty much, guys, what we were dealing with for an earnings recap of this week, what we've had and what's to come here. And then another thing to note is it's also OPEX, so our option expiration as we head into Friday. This is an event, guys, that we want to be aware of, because if we do start to see signs of manipulation, very tight ranges, chop, lack of continuation, again, we can still make money and still thrive on OPEX week. We just want to be mindful of what is OPEX and why might it hurt us, right? With all these options set to expire, there can be a lot of selling of premium because they're going to expire. And so again, naturally, a lot of things come, to the game when people are selling premium, trying to take advantage of its decay. So just be mindful, guys, of chop. Don't chase highs, don't chase lows, get your profits. And again, trade is normal, but just be mindful if we start to see towards end of week, a lot of kind of, trickery going on and traps as they're just taking advantage of OPEX. But other than that, guys, we could dive into some charts here. As always, want to cover the market, and we'll cover a few other things. Let's start here on ES. Sorry, guys, heading into this week on ES, again, if you're subscribed to my newsletter, you'll get all this information a little bit earlier, or if you're in the room and simpler with me, we're taking advantage or we're talking about this on a daily basis. But coming into this week, guys, the biggest thing that I was focused on was this big picture structure that we were starting to form, right? We had a crazy end of week last week. We had that CPI data that dropped us, huge reversal, getting back near the daily 21, total puke to end the day on Friday. And then we kind of gapped down on Sunday and started to rally here. So I started to build and observe, guys, as always, big picture structure, wherever these inflection points might align, right? We never know where structure will be. We let the market paint the picture for us, and then we follow along, right? So big pop, big drop, right in major zone, giving us a nice structure to work with here. So heading into this week, guys, wanted to see if we continue to hold bullish structure, if we work our way back towards liquidity and kind of back towards the zone that we failed at last time, or do we roll over? You guys can see what happened here. Nice little gap up, nice little rally right towards the zone that I had. And then we had another big gap up here as well, team. And actually, hold on. I want to add something here because I forgot that I had this, but we had a lot of great, where was it? There it was. Never mind. We can leave that out for now. Going back to what I was saying. Zoom in. So again, guys, long story short, we got the push to the mean, tried to get back to here, started the week nicely, good old rally, big gap ups, and then we just started to kind of top out as always. Basics here. Yesterday, guys, we took a few trips down towards that structure here that I've been observing, and you can clearly see that we held it and held it. And we actually ended up closing and playing around the daily 21, which again is right around this white level, but this is a big zone of liquidity. So as we start to top out here, guys, you can see that we're now forming, at least for now, a little short-term downtrend as we came into this morning. You know, hint, hint here, I like to draw and focus on structure on a 4-hour chart, right? Bigger charts, daily charts, things like that. So we had a little bit of downside pressure coming into this morning, and we also broke under our support. So a little bit of, again, edge here, guys, that we might go a little bit lower today. Obviously, we don't need to implode step by step, but we definitely saw a nice little drop, right? We actually opened at the lows, kind of in the middle of my two ranges. We rallied right back into that structure, zone, and liquidity level. Nice drop here, a little bit of a puke, getting close, and now we're just sitting in the middle. So obviously, guys, there's a little bit of time left in the market here as I make this video. We'll see just how crazy this is. But more importantly, what can we expect tomorrow? Very hard, guys, to know what Tesla will do to the market. You know, if Tesla gaps up very hard on earnings or gaps down very hard on earnings, it obviously could move the market. So generally speaking here, we just want to know the roadmap in front of us and then where we could go from there based on what we see. So again, just to give a bigger picture here, guys, of what's in front of us. Alrighty. So again, guys, we have broken our short-term support structure as we headed into today, started to form a little bit of downside structure that we want to continue to pay attention to. For tomorrow, guys, and again, this will probably change due to Tesla's nature, so this could go either way. If we just continue to hold the zone, if we start to pop, whatever reason it might be, we'll be breaking that short-term structure, looking to create a newer one, whatever it might be. But if we do end up, guys, just holding here and bouncing, I want to focus again on getting right back towards this range. This is a very hard level. I've already had these levels. We've gone back and proven them. And we also have the daily 21 right in this range as well. So again, if we hold one zone, kind of break out and start moving higher, this is the first target that I would anticipate. Second target, guys, would be top of that zone and kind of where we've topped out this week. And if we move any further, I have another zone right ahead, right around 37.92. Got a great point of control level, and then zoning that with 38.20. So that's kind of my first big target here, guys, this week. If we do end up holding and reversing, obviously getting back to these little targets. But if we go any further, kind of looking for that 38.20. Again, who knows? Maybe we absolutely explode. If we end up breaking, guys, through 38.20, generally speaking, have another big zone up here. So again, a bigger zone, so it might take time to take it out. But I want to note, guys, that the 50-day simple shown in purple here is actually starting to get a little bit closer to price action. I feel like we haven't seen the 50 in a while. And let me just go and confirm that real quick. Yeah, we haven't really seen the 50, guys, in over a month here. So again, the 50 is represented in this purple line, but very big line in the sand, team, where again, we're above it. Nice, kind of got through it, a little messy, just a target that I want to note, but it sits with a lot of big levels here anyways. So again, do we get that high? I don't know. But to wrap up here, team, for the rest of the week, again, understanding OPEX, understanding earnings, we can see a lot of reactions going up and down. We don't have to go anywhere, generally speaking. You know, we still have a lot of earning reports that the market might want to see. Maybe they're just building and waiting and waiting. Maybe they get to work, ripping us or dropping us. But to recap, guys, broke nice structure. Now we get a little bit of downside. It just started, so it doesn't have too much validity, right? It's just from today, but something to note. Where again, maybe we respect it and drop tomorrow. And if we do, I'll be looking to kind of take out the zone and get back to 3,600, specifically 3,604. And then we'll go from there. Next spot, guys, again, would be if we hold and reverse. Step one is right here. Maybe we get absolutely destroyed from there. But if we keep pushing, high of week, and the next zone ahead. So hope that helps here, guys. Again, I want to take a look at a few of the things that we talked about, such as Netflix, because this is actually an interesting setup that, you know, again, maybe wrong place, wrong time. Maybe market needs to take a break. Maybe market's going to go lower. Maybe market helps Netflix just absolutely soar. We'll see. But if we look at Netflix, guys, they get abused on earnings, right? They have a massive gap down and they never fill the gap. They have a massive gap down and we've just been going sideways. So the peak of this gap, guys, the unofficial, comes from an after hour level of, let me go and show you. Right, little after hour level here of 254, excuse me, 254.69. So that's what I'm calling the gap fill trigger. And filling that gap gets us all the way to 333. Massive gap. So on Netflix earnings, guys, if we take a look here, they made a really, really nice push to a very large moving average, which is that 200-day simple. And this is the first time, and again, not very impressive because it's just falling, you know, off a cliff. But our first time back at the 200 in a very, very long time, going back to January, of this year. We started at 200. Now we're playing catch up. But anyways, guys, a big level regardless. So Netflix talked a little bit about, you know, new subscriber growth moving forward. They had pretty decent earnings. You guys can go out and, you know, read a little bit more about that. But I want to talk about a few key levels here. So if we look at Netflix, guys, they put in an earnings high of 278.94 and, you know, kind of making a new high of day today. So the first level that I'm watching, guys, is obviously this range with that 200 days simple, which is always subjected to move a little bit, but as of right now is around 281. So again, at some point, these might become the same level. So we want to know what we're talking about here. But generally speaking, guys, for Netflix, one, I think they either fill that gap. So again, we do have an official gap here to the downside, right back below our gap fill trigger. So again, we'll make this a little bit of a zone. Hop back into Netflix. So again, guys, do they absolutely explode? Maybe they go sideways while the market, you know, figures it out. Maybe it takes one earning report to be well in tech that also helps Netflix explode. I don't know. I'm prepared for anything here, but I do want to keep generally a bullish bias, give them, you know, the benefit of the doubt, where I'm not necessarily looking to short this stock. But if it goes lower, I'm going to let it go lower. Maybe look to buy the dip. So if we take a look today, guys, you know, want to focus on low of day, whatever that might be for today's session. Still got a little bit of time. Probably safe to say that this is low of day. I have pre-market low at 264. So we'll just call it 264. Let's see what it actually is. Low of day 262. So right around here, guys, is some big levels. The 271 was a big level, kind of getting validated today. So more importantly is, again, top of this range in the 200-day simple and our official new gap, where if we break today's lows, we'd have to fill the gap down to here, which is also the upside gap fill trigger. Got a lot of gaps to fill now for Netflix. So a few scenarios here, guys, right? One is that it just coils in between these two levels and starts to give us a really nice squeeze, you know, maybe a 4-hour squeeze if it sits here long enough, maybe a 2-hour, I don't know. I'll let it decide. But if we could at least get some consolidation, and again, not fill that downside gap here, if we can just squeeze and get tight, that would be a better scenario, that maybe the market takes a quick break. Maybe it takes another earning report or two, and then Netflix keeps moving. And if they break through that 200 and they get through this earnings high, very, very large level here, team, at 290. That's a very, very big target for me. You can also focus on psychology of 300, but that is really my next major target. And obviously from there, can continue to work on filling that gap, but I don't want to talk about Netflix pushing that hard just yet. Let's one step at a time here. So again, few scenarios, guys. We consolidate, hold 264-ish, stand at the 200, break out, looking for 290. Any more, call it 300. If we can continue to consolidate and then break down, again, I'll let you guys be the judge if you'd like to short this move or not. But again, I'd be looking for this range. So again, you can short it to it, team. I can never tell you what to do, but that is where it probably has the best chance of going if it starts to break down. And personally, from here, what I'd like to see, guys, is maybe it fills its downside gap and then bounces immediately and starts to work back to these highs. So that will be a dip buy that I'm interested in if the context is appropriate. Other than that, I'm going to be very patient in this range and kind of wait for it to start to move and then get situated or position rather. Once it kind of breaks out, looking to catch that move. But if it just sits here, guys, be very mindful of it going sideways for a while until we see a few extra things. So that's my thoughts here, guys, on Netflix. And that is generally my thoughts on the market for this video. Again, we only got a few more sessions. Going to be keeping an eye on Tesla into tomorrow, whether it be good or bad. And we'll see what that does to the overall market. But I appreciate you guys' time. As always, thanks for support and watching this video. If you enjoyed it, show some love. And I will chat with you guys next time. But thanks again and finish the week strong. Cheers.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.